Kitco Mining's special coverage of the Precious Metal Summit is brought to you by Nucor Gold.
Gold prices have been relatively high these past months. So how come gold stocks are not on the move? I'm with Joe Mazumdar and Brent Cook, both with Exploration Insights. Great resource guides and longtime friends at Kitco. Gentlemen, welcome back.
Yeah, thank you.
Joe, I want to start with you, and we're going to start with precious metals. I'm looking at the GDX down 3% year to date. Is this just a regular dip, or is there something else that's happening right now, Joe?
It's actually better than I thought it was. The sentiment seems a lot worse than just being down 3%.
Don't look at the NASDAQ index, by the way. Then.
Yeah. But so, gold is actually positive, but most of the demand there has been from central banks and not from investors, let's say. More so from people trying to diversify their own asset bases in terms of central banks. So we're not seeing a lot of ETF demand for gold. And those same ETF demand, consumers also look at more leverage and go to gold companies. And that's not happening because they're not even going into gold. So unless that changes, I don't see the sentiment changing, but I'm sort of pleased that if it's only down 3%, that's encouraging. That with all the negativity that I hear, it's not down 20%. It almost feels like when I talk to people that it's down by way more than just 3 to 5%. The problem is going forward for the producers is with the production withheld in Saudi and as well in Russia to keep the oil price high. That's going to impact and compress margins further for some of these producers, making it harder for them to show decent cash flow for the second half of this year.
Now, you were previously used to work for Newmont as an analyst, and I always love following up with you on the quarterlies, just looking at the numbers. But I think industry-wide, and this was from Rodrigo Barroso with Aura, he was saying that there's roughly been a 20% increase in inflation costs right now, and you're seeing that come through in all the costs in terms of running a mine.
Yeah, oil is a big part of any mining venture, especially the open pits with the amount of tons you have to move. And so some companies do try to hedge, but it's a rolling hedge. And so they will maybe have a delayed impact on the oil price, but it will impact them eventually. And if they do everything at spot, it will impact them right away. $80 is a lot different than 60. And if the gold price only changes, 3 to 6%, but you have a 20% increase in your costs, that's definitely a case for margin compression.
Now, Brent, I mentioned at the start, you are resource guides for everybody. People apply to Exploration Insights to help them kind of weed through what's happening in the resource space. What happens, though, to junior companies when you have a downturn over several months in terms of being able to generate news? I mean, this is an industry that really relies on cash to do the drill results. You make news, you develop value at the end of a drill bit. But if you have a lack of money and lack of resources over time, how does that change? When you're analyzing new flow, how does it come out in terms of what you see?
I think right now, both Joe and I, it is his litter. I don't work anymore.
If you want to ask him about beach volleyball, he could tell you that.
Anyway, right now, news and the news releases are having minimal positive effect, if at all. If they're negative, is more often than not, because people, the sectors, the investors, particularly retail, and a lot of funds too, they're just looking for an out. It's such an illiquid market now. If they can see some sort of interest generated in buying, they're going to hit that bid. So when a company like, take for instance, GoGold just put out their resource, it was a good resource.
It was actually a scoping study, and an updated resource, yeah.
But the stock went north. I think it went down a little bit. Yeah. Unless you're someone like Snowline or you're a lithium company, it's really tough to generate interest in getting the share price up, as well as people that want to give you money. Another company, I-80, we just met with them, doing amazing stuff. They're not getting any recognition because there's no interest out here. I would say it.
Yeah, no, it's they definitely looking at. We talked to also a a PGM and nickel project in Brazil, and same sort of, they put out this new geophysical survey, and they're finding new targets, and they have a pending big mineral resource update coming, but their stock was down 20% on Monday. Yeah, people will take advantage, especially that one. It's gone up quite a bit, so people want to cash in and use their money somewhere else. But other people just want to pull out because all they see is that in 6 months to 12 months, they'll have to raise money again, but they might have to raise it at a much lower price. And maybe they'll have to raise a warrant. And what I found in some of the companies that we own is that these companies, some of them in their position are forced to raise money where the warrant that they're actually issuing, which is long term, is actually at a lower price than the initial position that many people have in the company, and that just doesn't, people don't like that at all.
Speaking of news or rather speaking of events that are impacting news, there was the forest fires that we had in Quebec. In another interview, you were talking about that, and that was having meaningful impact upon the activity that was happening in the province.
Yeah, I mean, like we were talking about before, like Brent mentioned, lithium is obviously the rage, but and the market was heating up because of the lithium, especially in the James Bay region of Quebec.
Sorry, we should just back up as well to some of the major players of lithium in Quebec, being Patriot Battery Metals, for instance, and it's a real hotbed right now, also with Seon and things like that out of Quebec.
Yeah, so you've got Patriot Battery, but you've also got Livent and Alchem, which did an M&A. You got Albemarle that came into Patriot Battery. You got Winsome as well. We have Azimuth, which I own a position in, that did a Rio Tinto deal on their lithium projects. So there was a lot of activity, and then you have Ford and EcoPro, Volkswagen, and another Korean battery manufacturing talking about building a factory between Montreal and Quebec. So a lot of talk, like you say, heating up the market, but in the background, another heat source was the fires. And the problem was that, on average, that part of Quebec sees about 150,000 hectares burned per year. This was 1.5 million. And so that put a lot of people back about 6 weeks to 2 months. And so when I was at this Quebec Precious Metals investment conference in Quebec City, there were people announcing the programs that they just funded, raised in the market to go out and drill. And then the next day they had to say, well, we just got kicked out. We can't go there anymore. Now they're just getting back there, but they're hoping to push their projects out to October.
Brent, are we seeing more extreme weather events impacting mines worldwide?
Not just mines, the whole world. I mean, you saw what happened in Libya just a couple of days ago. I mean, we're seeing a lot more extreme weather, and that's exactly what you would expect with the, anthropogenic global warming. So we're seeing that, but we're also seeing glaciers move away. So there's new ground in BC that they're finding new mineralization that was covered up 20 years ago by a glacier.
And the forest fires will give us a little bit more outcrop in James Bay too.
Yeah, that's a positive too.
And I think also I've seen people usually ask about water, usually further up the list right now in terms of what you're doing with your projects.
Oh, it's like this has been a thing that's been happening over the last year and a half, where the drought conditions that go all the way from the southwest U.S. down to Chile have made potable water, you're not going to get access to it. So you have to find other water sources. And so water is a big issue with permitting. And now with the new Mexican mining reforms, that's embedded almost in terms of how you manage your exploration program now, as well as, mining. So yeah, water is a much bigger issue than it has been. And it was always an issue in places like the Atacama, but now it's becoming much bigger.
Let's turn to critical metals, Joe, and thank you very much. You gave us a good explainer on critical minerals last time you were on, but I was just interested in the evolution within the junior space of all the people you track and the companies that you're invested in as well too. There was copper as the new oil, and we saw a lot of projects that came up on there. Obviously also what was happening with lithium. How has that space, or how has the junior space been impacted? How large has it actually grown, say, from about 5 years ago or even 10 years ago right now?
Oh, I say the impact is significant because that's where we're seeing a lot of the money flow into. But the money flow isn't from the same sources. So whether you'd have precious metals, you'd have institutional equity, private equity, and all these other companies getting into it. But now you've got governments, you've got auto manufacturers, you got battery manufacturers, and you got traders, all getting into critical minerals. Right now, lithium's probably ahead of itself. It's definitely ahead of the price. But there's no lack of interest in terms of funding. It's like we just saw Azimut raise $8 million in this market on a bought deal. And that wasn't for the maiden resource that's coming out on their gold prospect on Patwan. It's basically for the lithium exploration that they're doing. And that's what's driving it. It would be impossible, almost next to impossible, for a precious metals company to do the same kind of deal right now.
Unless they had spectacular results.
Yes, but we're also seeing industry coming in on the precious, but industry has been almost reluctant to help the precious metals. They're holding back a bit, and maybe they're worried that they don't have enough cash to actually fund some of these projects, because that's what you're going to need. Whereas that's not the case with the car manufacturers, not the case with the battery manufacturers, not the case with the governments. I mean, they seem to have money. Maybe it's our money, but they're allocating. And especially in Quebec, it's easy because, in Canada, we've got flow through and charity flow through, so you can raise it at a premium.
You mentioned that. Are you worried about this price now with lithium in terms of some of the juniors that are out there?
The lithium price, the LCE, lithium carbon equivalent's down about 40 to 60% at times year to date, but the lithium equities aren't. Yeah, that's the difference. Is that what we see is that other people are putting money into it, and what we're seeing in a lot of commodities is the down drop in prices because of the problems in China. But the people investing are thinking more medium term and trying to excise China from their supply chain. So they need the lithium in the Americas. They need the rare earths in a supply chain that'll work for them. And so they're willing to put in money now, and especially into processing facilities.
But where do you think we are in terms of the actual interest and excitement in lithium? It seems to me we're pretty near a top.
Oh yeah, I mean the thing is, I'm reluctant to invest in a lithium company, but if I've already got a company that's pivoting and looking for lithium, and they're going to get liquidity and they're going to get people buying their shares because of that, I'm not going to stand in the way. But I'm not going to go out of my way and pay a premium for a lithium prospect at this point.
The one thing that we hear covering the critical minerals space all the time is around net zero in terms of not having carbon emissions. And it's a thing that they're part of their requirements are, and then also about, how would you say, circular use of their materials. But, and I've also seen that for the gold seniors as well. You have a lot of people that are moving to net zero. But I also see the odd gold junior as well that is saying that, we have a new thingamajig and this is going to, it's going to reduce our carbon emissions, for instance. Does this really resonate? Does this really matter with precious metal companies? Your newsletter writers, is anybody asking about this at all?
No. I think it's certainly important to larger companies that are looking for investment from funds, because the funds have to show that they're ESG and all that sort of thing. But when you get down to the small companies, certainly, without a doubt, everyone's got to have proper relations with the locals and be environmentally sound in that. But to have some sort of ESG program that includes your carbon neutral and all this, to me, at that stage of a junior company, you're wasting management's time and money, I think.
Yeah, I don't disagree.
You guys go to a lot of mine sites. I follow your Twitters, and you're over and you're down in Latin America, you're visiting sites in North America and stuff like that. You're doing your due diligence when you're looking at projects. But Brent, to your point, talking about community relations, do you assess that when you're down there, or how do you assess that down there? And also, like an investor, when they're looking at the website or looking at the corporate person, is there actually a way of qualitatively determining if they actually are welcomed within the communities that they're operating?
Well, I mean, I've been on situations where I haven't seen any negativity on site, but what was interesting was you go to site and the locals are so convinced that the project will never happen, they don't bother protesting. So they don't need to protest because there's nothing to protest because it'll never happen. Uh, so uh, so it's not sometimes an easy thing to discern. But when you go to site, sometimes you'll see some people, if they start throwing rocks at your truck and stuff like that, you go, oh, that's interesting. Uh,
That's a bad sign.
that's a bad sign, yeah. But I mean, yeah, you can get some kind of, but it's mostly the news flow. And can you access the ground? Can you get a drill rig in there? Can you use water locally? That sort of stuff is really an indication how confrontational the situation is between the explorer, the miner, and the local community, and whether that relationship is going to get any better or is it just going to deteriorate further. And that's not a situation you want to be in.
The perennial tug is between safe jurisdiction versus go big or go home. You got to find a world-class asset, and to find that world-class asset, you have to go further and further afield right now. Whereas also, if you want to have yourself tied up in protections, whether you're in Australia or whether you're in America, because you have all of the regulations around what you're doing as well too. So. Where do you guys fall on that spectrum? And again, just kind of qualitatively determining, like if you're looking at, say, a project that is the same in all characteristics, say between, and I'll pick on the DRC versus Canada, for instance, how do you assess that risk reward right now?
Well, right now, I view no place is safe. Just today, I think, is the Biden administration announced a proposal to increase royalties on hard rock mining, being gold, copper, such in the States, to somewhere between 4 and 8%, I believe, of a royalty on top of what was already there. I don't think that'll pass, but that's a real killer for a lot of these projects. So I think no place is really safe, but I would certainly prefer to make a discovery in Nevada than Colombia, for instance. And, even I don't think it's got to be much, much larger and higher grade with a quicker payback in a very sketchy place like, we'll call it Colombia, than Nevada or BC, although they've got issues as well.
Everyone has issues. So if I was looking and I said, okay, I like Arizona and like Arizona Sonora Copper, which is one of my top picks, for copper exposure and also safe jurisdiction, but it's Arizona, which is a top copper producer in the States, obviously. And, in my time in Phelps Dodge, it wasn't easy to permit even back then. But if you're on mostly private land with a footprint that and you can get water, then your de-risking is embedded in the valuation. Hopefully, that people can see the value that this is something that can actually happen. But for somebody that's not on private land and has to go through the U.S. Forestry Service or the BLM, it's worth trying to get the private land and maybe even technically overpay because the value of the discounting through the permitting process with the BLM or the U.S. Forestry Service will, that'll just take away your value, if you have to wait 10 years.
Anything tangibly happening with critical minerals? Because mining has been embraced right now, and there has been...
There's a difference between embracing the idea of critical minerals and in embracing the anathema, which is mining, that people hate. So they want this, but they don't want that. And that's, the Biden administration might say, hey, we want all this. But what they're really pushing now is to get it from other countries. So they'll want to get it from Chile and Peru, the copper. They're making agreements now in Vietnam to look for potentially nickel and rare earths from there, making sub-deals in the DRC and Zambia for copper and cobalt. Because it's easier to permit mines there and potential processing facilities than it is in the States. So there's a definite difference between what they want and what they're willing to do to get it.
Lastly, guys, what's some of your favorite ideas right now?
All right, I'm going to visit Headwater Gold in a few days. Look at their projects in Nevada, all epithermal high grade vein targets right now. I've had some success. I like the deal they've done with Newcrest. Basically, it carries them all the way to feasibility decision or feasibility, and they maintain 25% in the royalty. So I like that Headwater Gold. That's because I'm going there now.
Yeah, and so, when I was worried about margin compression a couple of years ago, I started getting out of production and going into royalties. And one of my top picks on the royalties is a junior royalty play called Origin Royalties. And that one, their exposure is, and now they're cash flowing and covering their G&A, and they've got prospect generation programs with Altius Minerals, which is a bigger royalty company, but more diversified. And importantly, what's running a lot of the valuation is the upside they have on another royalty on a project called Silicon Merlin, which is run by Anglo Gold, which now looks like the resource is getting close to 10 million ounces and could grow further. And so the value, even though that's not in production now, but the value of a royalty that's run by a major company in a jurisdiction like Nevada, embedded in a junior company, is what's driving that in terms of growth going forward.
Joe Mazumdar, Brent Cook, Exploration Insights, Thank you very much for your time with Kitco.
Yeah, thanks for the invitation.
Thank you very much.
My name's Michael McRae here with Kitco Mining at the Precious Metal Summit. Subscribe for more coverage from Beaver Creek, Colorado.
Kitco Mining's special coverage of the Precious Metal Summit is brought to you by Nucor Gold.